Plug power tumbled. It's now more than 50% down from those all-time highs. But for RBC, Plug power is a bet on hydrogen fuel, a key part of the economy of the future as companies and governments decarbonize. Joining us now is RBC Capital Markets analyst Joseph Spack. Joe, it's good to have you. So, Plug is often a story, if anything, trades at a higher valuation than maybe the business model would warrant. Explain how you get to your price target.
Yeah, sure. Thanks for having me. So, look, I think you laid it out well. Plug is a go-to name for the thematic investing around fuel cell and hydrogen. The way we got to our $42 price target is looking at the growth this business can enjoy. So the hydrogen economy is still in its infancy. It's pretty nascent. There can be, we think 50% annual growth through the end of the decade. And that's about in line with what we have Plug growing at. And on top of that, we have them becoming profitable as they shift their business model a little bit, go to generating green hydrogen, which is a newer venture for them, and ultimately ending up, with about $2 billion of EBITDA sometime around the end of the decade. So, that's how we sort of look at this name. We look at a multiple on 2025 EBITDA, and then a longer-term 10-year DCF.
So let's talk about the role hydrogen could play alongside, in conjunction with maybe sort of the electric engine model. I mean, often what we're talking about are roles in maybe robotics and some other kinds of transportations. Explain where hydrogen is most applicable and how much growth you foresee.
Yeah, sure. So today, I think the use case for hydrogen economically is not really there. It's pretty nascent. And if you look at Plug's business model today, the majority of their revenues are driven by material handling, where they have made some breakthroughs and they have done some other stuff to make that cost competitive with traditional offerings. As we see governments invest in hydrogen products around the world, and there's a lot of incentives, there's a lot of policy decisions, we think that hydrogen will become more cost competitive across a broader array of options. And that's really, I guess, what I sort of stress here, that the Plug is in the middle of transforming from becoming just a leader in fuel cell material handling to becoming a one-stop turnkey hydrogen solution provider. And that means expanding fuel cells beyond end markets such as in material handling to stationary power and transportation, but also becoming a vertically integrated producer or distributor of hydrogen. So you get this almost flywheel effect where they can generate green hydrogen inexpensively, be that producer, distributor, and supplier of hydrogen, and then sell fuel cells or electrolyzers at the plant and fuel cells to be able to create this flywheel where there's more demand for both the fuel cell product which then creates more demand for the hydrogen. In terms of use case, I think on the transportation side, and you mentioned battery electric vehicles, I would say on the passenger vehicle side, we continue to believe that this is the world will move more electric, right. Where we see the use case for fuel cells is in some of the commercial vehicles, particularly for longer distances.
Shepard Smith here. Thanks for watching CNBC on YouTube.